Sawyer silver, Valut silver at $68 is not normal. You've seen the headlines. You've watched the charts. And if you're like most people, you think this is just another spike, another temporary move that will fade as soon as the FED blinks. But what if I told you that silver hitting $68 is not the story? What if I told you that this price level is actually a signal, a decoy hiding something much bigger happening beneath the surface? Something that has almost nothing to do with silver and everything to do with Bitcoin. Stay with me for the next 3 minutes, because by the time this video ends, you're going to see the entire crypto market differently. You're going to understand why the biggest money in the world is moving quietly right now, and why most retail investors are looking in the complete wrong direction. Because while everyone is staring at silver and gold, a different kind of earthquake is forming under Bitcoin. Let's start with what you already know. The price of silver just ripped past $68 an ounce. That hasn't happened in over a decade. Gold is knocking on $2,400. And the mainstream financial media is telling you it's all about inflation, the weakening dollar, and central bank buying. And yes, that's partly true. But here's what they're not saying. The same institutions pushing silver higher are the same institutions that quietly bought over 200,000 Bitcoin in the last 90 days alone. Not retail, not influencers. BlackRock, Fidelity, Goldman's crypto desk. The same names that moved silver are now stacking Bitcoin like it's 2021. Except this time, there's no mania, no hype, just cold, calculated accumulation. Think about that. Silver is screaming. Gold is waking up. And yet, the Bitcoin ETF inflows just had their third largest week in history. Over $800 million moved into spot Bitcoin ETFs in 5 days. That's not normal either. And that's where the real mystery begins. Here's what almost nobody is talking about. The Federal Reserve is trapped. On one side, you have inflation that refuses to die. The latest CPI print came in hotter than expected. Core services inflation is sticky. Energy prices are creeping up. And the bond market is starting to price in not 1, not 2, but possibly 0 rate cuts in 2026. On the other side, you have regional banks sitting on over $500 billion in unrealized losses from treasuries. Every month that rates stay high, those losses grow. And the Fed knows, if they cut too early, inflation explodes. If they cut too late, the banking system cracks. So what does this have to do with silver at $68 and Bitcoin? Everything. When the FED loses control, and right now they are losing control, capital starts looking for exits, not just into gold and silver, into hard assets that cannot be debased, into things that exist outside the traditional financial grid. And Bitcoin? Bitcoin is the only asset in human history that is mathematically guaranteed to become more scarce over time. Not less. More. Institutions understand this. That's why they're buying silver and Bitcoin at the same time. Silver is the old world's signal. Bitcoin is the new world's escape route. But here's where the story gets even stranger. Look at the on-chain data from the last 7 days. Bitcoin exchange reserves just hit a 6-year low. That means the number of Bitcoin sitting on exchanges, ready to be sold, is the smallest it's been since 2018. At the same time, the number of wallets holding at least 100 Bitcoin just hit an all-time high. Who do you think those wallets belong to? Not you. Not me. Institutions, family offices, sovereign wealth funds operating through proxies. While retail is distracted by silver's big, shiny move, the smart money is quietly pulling Bitcoin off exchanges and into cold storage. They aren't trading. They aren't flipping. They are confiscating supply. And here's the part that should send chills down your spine. There are only about 2.3 million Bitcoin left to be mined. Ever. Total. Forever. If the current rate of institutional buying continues for just 12 more months, not a crazy scenario given the ETF flows, the available liquid Bitcoin supply could literally run dry. Not low. Dry. Think about what happens to price when demand stays the same, or grows, and supply vanishes. Silver at $68 will look like pocket change. Now let's bring it back to this week's headlines, because something just broke that almost no one is covering. The U.S. Treasury just revised its borrowing estimate for the quarter, up by over $400 billion. That means more debt, more issuance, more pressure on yields, and more reason for the FID to eventually have to choose between saving the bond market or saving the dollar. They cannot save both. When that choice becomes undeniable, and it will, capital will flee. Not slowly, not gradually, all at once. And where does capital flee when every major government on Earth is debasing its currency at the same time? The same place it fled in 2020. The same place it fled in 2013. The same place it will flee again. Hard money. Scarce money. Money that cannot be printed. Silver. Gold. And Bitcoin. But here's the difference. Silver and gold have a centuries-old head start. But they are heavy. Hard to move. Hard to divide. Hard to cross borders with. Bitcoin is the first hard money that travels at the speed of light. That's not a small advantage. That's a superpower. Let me pause here and ask you something. Have you noticed that the same people who called the 2023 banking crisis, the same people who predicted the Silicon Valley Bank collapse, are now saying absolutely nothing about Bitcoin? That's intentional. Because if you're a large institution accumulating an asset, the last thing you want is retail FOMO driving up your entry price. You want silence. You want confusion. You want the crowd staring at silver at $68 while you quietly buy the future. This is the quiet before the storm. And storms in crypto don't give warnings. They just arrive. The next 60 seconds contain the most important information in this entire video. So listen closely. We are approaching a convergence of 3 events that has never happened before in history. Number 1, a U.S. presidential election year with both candidates promising more spending, not less. More debt, not less. More inflation pressure, not less. Number 2, a Federal Reserve that has lost the ability to fight inflation without breaking the financial system. Number 3, a Bitcoin halving that has already happened. And historically, the 12 to 18 months after the halving produce the largest price moves. We are in that window right now. Silver hitting $68 is not the main event. It's the smoke before the fire. It's the signal that large capital is rotating out of paper assets and into real, finite, unconfiscatable wealth. And Bitcoin is the only asset in that category that also gives you global, instant, borderless liquidity. The institutions already know this. The ETFs already know this. The on-chain data already proves this. The only question left is, what are you going to do about it? Because here's the truth they don't want you to realize. You don't need silver at $68 to validate Bitcoin. You don't need gold at $2,400 to understand what's coming. All you need to do is watch what the smart money is actually doing, not what they're saying. And right now, the smart money is doing something historic. They are selling bonds. They are rotating into hard assets. And they are accumulating Bitcoin at a rate that suggests they expect price levels most people still laugh at. But nobody laughed at Bitcoin at $1,000. Nobody laughed at Bitcoin at $10,000. And nobody will be laughing when the supply crunch hits and silver at $68 looks like the warm-up act. The signal isn't silver. The signal is what silver represents. The signal is the end of the fake money era. The signal is the beginning of the scarce asset era. And Bitcoin is the ultimate scarce asset in a digital world. Don't let the headlines fool you. Don't let the shiny metal distract you. Watch the wallets. Watch the ETF flows. Watch the on-chain data. Because the real story isn't silver at $68. The real story is what happens next, when the world finally wakes up and realizes there's only one asset that combines digital speed, physical scarcity, and global accessibility. That asset is Bitcoin, and the clock is ticking faster than you think. For more videos like this, subscribe to our channel, Sawyer Silver Valut.